draw it from the start, it really doesn't matter. So what we're going to do is we're going to be pulling up the halvening, these halvening events, and what you do then is you pull up your time analysis over here, fib time zones, and from the halvening to the next halvening, you from the first halvening to the second halvening, you pull up your fib, your time zone fib, and we can see that the market tends to bottom. Now this was the 2015 bear market, and we can see that Bitcoin bottoms between these areas, right? The 61.8 and the 78.6 level. And then again, from the second halvening, we can pull it up all the way to the third. Let's put it there so you can see the trend lines as well. Let's pull this trend line up as well so we can see kind of the angles that these Fibonacci time zones adhered to. And then from the third halvening, the next halvening is in March of 2024. So let's just pull that up to there. Let's make a guess of where the price might be, right? Somewhere there. So this shows the 18th of March. You probably can't see it because my head is in the way. The 18th of March over there. So in 2024, this is when the next halvening is expected. And from there, once again, we can see the first cycle, the first real cycle, the four-year cycle. We can see that between, we're not going to measure these at the beginning. It's just not enough data there because this was the first halvening, right? That's pretty much all the data we have. And then again, in this area down here, and what we're going to do is we're going to add the Fibonacci retracements that just instead of the time shows you the price ranges. So the time analysis is your dates. We can pretty much see that we are well into the accumulation time zone. This is where the accumulation phase has happened. W.D. Gann, which is a famous technical analysis, once said that when the time is up, the price will reverse. So, and we will go off with once something happens. It's just a data point. When two things happen the same times, you have a coincidence, and when something happens for a third time, you have a trend. So we don't technically have a trend here, but we'll just enjoy the analysis for what it is. Next, we will pull up the Fibonacci tool, and generally what you do is for the retracements to find accumulation areas, you will pull it from the bottom to the top. Now this is based on the linear scale. We do not need the log scale for this analysis because it's kind of short term. And what we'll do is we'll pull it all the way to the top, and I'm just to make it look aesthetic, we will pull it to where the accumulation phase ended according to the Fibonacci time zone analysis. And what we'll do now, these two areas is the 78.6 level and the 88.6, two Fibonacci levels that I like to use. The 61.8 is a little bit higher, but Bitcoin doesn't adhere to it. It goes a bit lower below the 78.6 level. And now we have a nice little box which showed us the accumulation phase, the first cycle. And we can see that if you bought in this area, you would have performed pretty amazing, right? And then in the second halvening, we'll just do that Fibonacci retracement again from the bottom to the top, and let's just pull it across to where the accumulation phase according to time ended, and that's that over there. And we'll just pull this box down a little bit to the 78.6 level and the 88.6. And you can see the beautiful accumulation or market structure that happened there. You can see this double bottom, right? Now, this is just what I mean when I generally say you want to see a W, right? You can look for W's on shorter time frames, larger time frames, and in this case, it's the weekly, right? See a little double bottom there. Over here, it wasn't the best double bottom, but this is technically still a double bottom. The price just has to be within 5% of the previous low. But if you put this on a line chart, right, this is a beautiful market structure. You've got higher lows, the candle bodies all closed higher than the previous ones. So yeah, technically this is a double bottom. If you put it on the line chart, it just takes out a bit of the noise, right? As these was very illiquid markets back here, which just means the price will move pretty quickly through these areas if there are sell orders, right? Or massive market dumps. I don't want to call bottoms, but you can see this beautiful little double bottom here as well. If we put it on the line chart, you know, what symbol is that? Just smiling at us. And that's technically a breakout already on the line chart. Let's see if it's broken out on the candlesticks now. This candle went quite high, all the way to 18K, 18.36. So we need to close above there for this candlestick chart to be confirmed for the breakout. Yeah, so let's do the last Fibonacci extension, or retracement, excuse me, from the bottom all the way to the top, and we'll just pull it across. And there we go. Now we are inside of this little green box, but just inside of it, but still valid. And we're just sticking our heads out above the 78.6 level. So there you've got your accumulation zones. Interestingly enough, we've got 3 points here, the 382, the 618, and we can see how beautifully this also predicted the tops. Like this top was a week after the 0.38 printed. This one in 2017 was 2 weeks before the market printed the 38.2.